What's happening? Welcome aboard, guys. Another day, another stream. We are approaching, still a couple of days out, but we are approaching that federal funds rate decision day. So, high impact event on the horizon. I've gone ahead and marked out where that is on the chart, so you can see not many hours to go. Let's get a count, including this hour. It's 1 day and 20 hours, so less than 2 days, guys. We get that decision by the federal funds, by the FOMC committee. So now, as we know, according to the Forex Factory calendar and other sources as well, it's not just this source, but if we're looking at February here, here's the funds rate. Last funds rate caused us to pull in a 4.5% interest rate. So that's where we currently sit. The market is forecasting a 25 basis point hike, which would take us to a total of 4.75% overall interest rate. So the market, or the forecast being 25 basis points, you could argue has been kind of anticipated or priced in to the market already. However, I think it would be wise to stay cautious and not assume that we're going to get 25 basis points, because we may get 50. And that would shock the market, and you don't want to be in something when the market gets shocked, right? You don't want to be like, caught off guard, I guess you could say. So, in other words, I think it's important to wait. This is not financial advice, but what I'm doing, if you want to know what I'm doing, I'm waiting until after the funds rate decision comes out and the markets settle into a trend based off what that decision is. And that's when I'll take action toward some bigger trades. Still happy to scalp between now and the Fed funds rate. There's nothing wrong with that. Stop losses, that kind of thing. Protect yourself. But just be aware that, around this time, generally speaking, the market is very volatile and indecisive. So trying to predict what's going to happen before the fact can get you burned. So be careful, guys. That's all I'm saying. Let me check. Let's have a look at the previous funds rate decisions on the chart here. So I think the hour chart should cover that. You can see, look what happens CPI. This is another example. So CPI and funds rate, they both have high impact on markets. You can see we sort of rallied up into the CPI data release, and it was a positive release, right? This was a positive outcome for CPI, but look at what happened. We dumped initially. Kind of unexpected, right? You would think positive outcome, positive market move, but the initial reaction after it was a huge sell-off. So be careful of that. Obviously we got back on trend, and this was the actual, real reaction to the positive news. It helped us rally, not only in crypto, but also in the stock market, right? But this is what I mean by letting things settle down at the event. Don't assume that you know the direction 5 minutes after the decision. You just got to let it. You got to let all of this volatility, just pan out until you see the overall direction. And it's the same with funds rate. So that's what's coming up in less than 2 days. Funds rate decision. Now we had a bit of a double whammy here. Now this CPI data release was positive as well, and it was kind of forecast to be positive. So I think that's why we rallied up into it. But look, once again, CPI data came out and then it was like a sell the news kind of thing. So you just have to be aware that when these things happen, there is a buildup of anticipation leading into the event, and then like a sort of sell the news type situation. So this funds rate, by the way, this was the first funds rate that came out with only a 50 basis point hike. 50 basis points. Because the previous 4 were 75, so they were like really heavy hikes, right? So let me keep that up there. Let's write in 50. Say 0.50 because it's a 0.5, 0.5% increase to the overall interest rate. So that took it to 4.5% total. And then we had one back here. Now this one here was actually a nasty 75 basis point hike. Right? 75 basis points, and now the one prior to that, let me zoom out a little. So we had a 50 here, a 75 here, and let's grab let me show you this. I'll just get a screenshot of it. I said this yesterday on my Discord for everybody, but I'm going to bring it over to you guys in YouTube land just so that you can see what I said. Okay, with the FOMC's interest rate decision fast approaching, I thought this would be useful to understand where we currently stand. So we're currently standing on 4.5% interest rate. Based off, now check out this, December, January, no increase, no, just business as usual. And that has been the case for many months, right? There was no hikes, there was nothing. It was just flat. So, you know, the FOMC's interest rate decision had, you know, a low impact on markets, I would say. And then this is where things started to get interesting. In March last year, they increased the interest rate by 50 basis points. That's pretty aggressive. Obviously, inflation was getting out of control. So, yeah, 50 basis points taking us to a 0.5% interest rate. Then another 50 in May, taking us to 1%. And then we had this nasty 4 in a row of 75 basis points. You know? So that's taken us up real severe. So when we had this 50 come out, this was like a pleasant relief off the really high increases that we've been through, you know, as of the bulk of last year, right? So if we now we know that the forecast is 25 basis points, so they're suggesting that they're gonna soften the increase. Now keep in mind, it is still an increase. It's not a pause. It's not a pivot. We're not making reductions or cuts to the interest rate. But yeah, 25 basis points would still be an increase, but it would be a nice positive. I think, you know, a step in the direction of optimism if it's 25. So I don't want to rule out 50 though. So I'll just read this out so that those that aren't looking, if they're just listening to the stream, they get the message. But the forecast for this rate decision is a 25 basis point increase, so 0.25% increase to the overall interest rate. Still an increase, but much softer than the previous 7 hikes. So we've had 1, 2, 3, 4, 5, 6, and then 7 was our most recent one of 50. So a 25 would be softer than the previous 7. So that's pretty. I think that's pretty interesting. That's a pretty serious situation there. That implies that things are getting better, right? Okay, so rate forecasts are generally accurate, as apparently the Fed don't like to shock the markets. Now, there was only one of the hikes last year that caught everyone off guard, and that was the June hike. Now, they forecasted a 50 basis point increase, but we actually got a 75, so it was more severe. And that was, a shock to the market. I'll show you where that happened. Which candle? So it happened in June, and it was that candle right there. I'll point to it. So this one. This selling candle here was thanks to that 75 basis point hike that caught the market off guard, because they were sort of pricing in and expecting 50, but they got 75. So yeah, we just want to be careful of something like that could happen again, like where they shock the market. They don't like to do that apparently, but it's possible. So yeah, that contributed to the sell-off on Bitcoin, which was already suffering from the damage of the Celsius crash. Like, here's Celsius, right? That's the Celsius crash, all of that. And then this was the 75 basis point hike, so it just added fuel to the fire. And then obviously we had Terra Luna, which was back here. But that's another story. That happened a little earlier, like about a month earlier. But yeah, here we are. This hike here, although it was 75 basis points, we kind of were getting used to that kind of aggressive reaction by the Fed at that point, I feel. So where was it? The 75 hike. There it is, the 75 basis point hike. Okay, so we actually rallied after that. So we got the result, and then the market was a little bit volatile, but then we got back on track and we started climbing, actually, which is surprising, right? You would think that from such a tight economic implication of an increase of 0.25% to the interest rate, it would cause people to be more cautious and less bullish, I suppose, on the markets. But here we are, we got that pump, and then of course Sam Bankman-Fried, we find out that FTX, naughty, and we crashed down, and that was a black swan event. Like, unless you were clued into what was developing with that, it caught everyone off guard. It caught me off guard. It caught the bulk of retail off guard, I think. If you were quick to react to it and you saw it coming down, like, you could have opened a short and then rode this whole thing down. But yeah, here we are. Okay, so pretty much, let's see. Like, we're gonna be learning a lot about how come a day and 20 hours time, I'm going to be streaming it for starters. We'll be here talking about it, so tune in at that time. Now, I'm going to give you a time for when that happens. I'm just going to jump back on the calendar here, and let's go to Eastern time, so GMT -5. Now, is the Eastern time currently in daylight savings yet? I don't think they are. It's not quite daylight savings yet. That's why it's -5, right? And then during daylight savings, it's -4, I think. Okay. Anyway, so this should be accurate to Eastern time as to when this meeting starts. So it's on the 1st of February, so Wednesday, at a very comfortable 2 o'clock in the afternoon on Wednesday. This Wednesday coming, guys. So the funds rate decision comes out 2 p.m. So if I just change to New York time, I'll just make sure this is accurate. Yep, 1400, 2 o'clock in the afternoon. Okay, cool. So for me, I think that's, I mean, I've been getting up pretty early anyway lately, but yeah, 5 a.m. I'll be up bright and early, guys. I'll get up at like probably 4:30 and put the stream on. So I'll be streaming half an hour before this. So that's 1:30 p.m. New York time. Okay, I'll be right back. I'm just getting a call. All right, sorry about that. Where was I? Just had someone trying to sell me something. Telemarketer. All right. So we got like less than half an hour to go for our Monday daily close. Monday was pretty necessary, I feel. This pullback, things were getting a little bit too ahead of themselves, I think. So yeah. Now let me catch up with the chat here. What's up, Dogecoin? Hello, Lex. What's up, Matches? Matches is from the future. Holla. Aaron. Hey. Jack. Better. Previous recent reports have been good for the economy. Yes. Yeah, I've heard good things, and I've also heard a lot of caution. There's a lot of people that are still bearish and scared out there. So, a lot of people are actually calling for a recession. So I guess I'll believe it when I see it. But yeah, it's always in the back of your mind. You always tread lightly, tread carefully in markets. Because you just don't know what's around the corner, right? And this is why we have stop losses, and this is why I will always use a stop loss now. By the way, I got out of that position that I've been in for 5.5 months. You can see that's where the position was, or where I had it. And we briefly came up above it, and I sold it. I got out of it in profit, and then I'm now fully liquid, so I can totally, snipe out the next entry. And I'm going to be patient with it. I'm not going to do anything crazy until after this funds rate, right? Happy to still scalp between now and then. Scalping's different. Scalping, it doesn't matter what's going on, as long as you're paying attention to your indicators in the micro structure, right? But yeah, relaxing sounds. How you doing, man? Good morning. Question: I think we're good with a 25 hike to get inflation in check. What do you think? Are they overdoing it if it's 50? I don't think it's overdoing it, because they did a 50 recently. Now there was a bit of a hint dropped by Jerome Powell in one of the press conferences. He did say the rate isn't where it's where they want it. They want to get it a little higher. So I think people interpreted that as maybe 5% or 5.5% total, as the terminal rate. So the final, peak of the interest rate. But now he did say that it wouldn't be as rapid, or the increases wouldn't be as aggressive as they were last year. Because I guess last year it was necessary to increase the rate that quickly. Carefully though. They didn't want to crash and ruin the economy, but it was, I guess, a necessary course of action to start to try and bring inflation under control. And we're starting to get that. Inflation is heading in the right direction. Let's look at that. This is the inflation chart, right? Blue line, we can see that peak last year in June was 9.1% peak rate. Currently, we're sitting at 6.5%, but remember, the BLS, the Bureau of Labor Statistics, they're reporting on the previous month's performance. So this data, this 6.5%, is actually 2 months old now, because this was looking back on November as we got this report in December, right? So that's, I believe, if I'm not mistaken, that's the reading. Or let me just double check that, because I want to make sure it's accurate, what I'm saying. We had CPI in January, the 12th of January, and January looks at December. Okay, so I lied. This was December. the December performance, which is why it's saying December on the chart. Silly. 6.5% for December. So we're trying to figure out what the January performance is. My projection is 5.8%, and that's based off Trueflation. Now, as I say almost in every stream, Trueflation try to report inflation on a day-to-day basis. So it's like a live reading rather than a month delayed reading like the government puts out. So yeah, like I guess the closer you get to the next CPI report, it's actually 2 months ago that you had the last figure released. Now back to the interest rate. This is where we're currently at. So if the Fed, if in the last decision the Fed increased by 75, like if they stayed the course and did a 75-point hike, we would be where the light blue line is. But they actually pulled it back and only did a 50-point increase. So that actually, you can see that's changed the curve a little. We're not going up as sharp. It's a slight decrease. Now at this next rate decision in less than 2 days, if they were to pause, which I doubt, I don't think they're going to pause, which means no increase, just keep it as it is. If they were to pause, obviously the blue line would look like this. If they increase by 25 basis points, it's the orange. And if they do a 50-point hike, which is not what people are expecting, it would go up in the red here, like it would go up to here. So that would be a 5% resulting rate. But we've forecast the 25 points. I'm feeling optimistic that we'll get the 25, but I don't want to assume. I don't want to expect it, right? That's the point. I'm not here to make a prediction. I'm not here to front run the decision. I'll let the decision come out and then take action off the decision, the fact, right? Where you can help it, make decision based on facts, not predictions, okay? You don't want to get yourself wrecked and lose money that was unnecessarily lost, You can avoid that. All right. So that's enough about the interest rates and the inflation rate, all right? Sorry to keep boring you with it. Do you guys find it interesting? Do you think, I mean, I'm telling you it's important, right? But I know that it's good to have this, I feel, as like a primary fact to look at and be aware of, because it plays into every market. It's the whole reason we're in this shit show of last year is because of the inflation and interest rates being so high. So, we paid the price in markets. Stock market came down, crypto market, as we know, came down. And just look, we're starting to get optimistic because that inflation rate has been coming down since that peak at a linear pace. Like it's been nice to see at every CPI. We've been making progress, bringing that inflation down. It's just that what we're seeing is that the interest rates haven't necessarily been coming down. With that, they've sort of remained hawkish, and I think that's a good thing. I think stay tough on it. We can repair the damage later, but we really need to get that inflation down. That's their goal. That's kind of their message that they've been putting out. Now, Clive's got a comment here. First off, there is no way in heck that there is not going to be a rate increase. Okay, understood. I would agree with that. I don't think it's time to pause. If I was Jerome Powell, some people are actually saying he's just got to come out and do a 50-point hike, stay tough. It's going to cause some pain to businesses and companies for the next month or whatever. But, people that are trying to take out loans, that interest rate's high, but, it's going to have hopefully a good effect on inflation, and that's for inflation to come down. So, all right, let me catch up with some more of these comments here. Not overdoing, more of not needed. Sell your crypto? Look, that's your decision. I'm not here to tell you to sell or buy. I'm just here to show you what's happening in the markets. That's what I'm all about. And how you can approach trading, like, strategy. Frank says, "What's up? How you doing? What's up, my glip glops?" Greybeard, do I buy now? Danny Boy Rick, good night from North Miami. What's up? Good night. Good night to you. Good evening. Good evening, America. And good morning, Australia. Mr. Rick, can you compare the inflation rate with the 2-year Treasury? Now that's something I still have to learn about. This whole the bond market and how that impacts and how that gets affected. I've heard of the yield curve. Currently, the yield curve's inverted, and that's not good for investing or whatever. But look, before I talk about that, before I comment on that, I'm gonna have to research that just to give you just so I'm not putting bullshit out there. I wanna get educated on that first. But yeah, we'll wait for that. So DC woodworking, lots of volatility coming. Yes, volatility is what we want as traders, right? We want to see that differential in price. We want to see it come up and down. Maybe Clive will be kind enough to explain the yield curve situation in the comments there if you want to read about that. Thank you, Clive. Aaron says, yes, I find it interesting, but can you explain what 25 basis points would mean to the stock and crypto market or inflation? Yeah, so a 25 basis point increase is a softer increase than they've been doing for the previous 7 hikes, right? So it's kind of showing that they're slightly taking their foot off the accelerator for interest rates. They're still accelerating, but it's slowing. It's slowing. It's just easing off that aggression. So that's what a 25 would mean. And because the market is expecting 25, that's possibly why we've been rallying up into the decision, right? All I'm saying is don't expect anything. Like, don't try to curb your expectations from what the forecast says, basically, and wait until after the fact to be safe, right? Obviously, you can do whatever you want at the end of the day. If you want to take a position and have a bit of a gamble on it and try to predict what's going to happen, then by all means, that's your prerogative. That's your decision. Let me see now. So for the stock market and crypto, they're both markets. They're both going to react similar. Crypto seems to follow the sentiment of the stock market. So whatever happens in the stock market, like if the stock market crashes, you best believe crypto is probably going to crash with it in kind. If the stock market rallies and goes up and breaks resistances, that's going to be optimistic for crypto and Bitcoin, right? So yeah, there is this relationship with sentiment in both markets. How strong they perform off that sentiment, that's the variable. That's how they vary. Like, the stock market may go up 2%, but then you've got Bitcoin going up 15 because of that, right? It's that can happen, So the percentage differential is different, but the directional similarity is there. Like, they kind of borrow the same direction. Or crypto borrows direction from the stock market. Let me see. Honest, what's up, Honest? Good to see you, Mr. Greybeard. Yeah, it's always cool when Greybeard comes in. All right, let me read out these comments by Clive. That's probably likely about the yield curve and everything. Clive's saying, I was leaning to 25 basis points, but as things got better in the market, I'm thinking 50. Yeah, okay. And I'm trying to keep an open mind because I'm thinking, what if they do shock the market with the 50-point hike? We'll see. Greybeard says, don't think he has the room to do 50. Yeah, well, yeah. take your bets, take your punts at it. But yeah, we'll see. We'll see what happens. Not long to wait now, less than 2 days. It's kind of like Christmas, right? Clive says the goal of 2% inflation is probably not going to happen for years. At best, 2 to 3 quarters. 2 and 3 quarters. Well, yeah. Well, if that's the case, damn. We'll see. We'll see. Inversion of the yield curve makes short-term investing is favorable over long-term. Right. Okay, I see. Yep. So I guess because people are fearful of the long term, like they don't want to plant seeds and hold things for a long time because things are uncertain. So maybe short term, yeah, I see the point there. Greybeard says, I'm thinking 3.5 at best for the inflation rate. Yeah, I mean, yeah, we'll see. See how this pans out. Traders want volatility, investors don't. Yeah, investors want growth, right? That's what investing's all about. It's about taking a position and watching that asset that you're backing or counting on grow and appreciate in value. I still think if you're shorting, that's not an investment play. That's shorting the market is more of a trade or a swing trade, you could say. But yeah, investors are after stability. Yeah, there will be high volatility before the announcement, before Powell speaks, and after he speaks. Yes. So not only is there the figure that comes out, like the rate decision, but there's also the commentary that follows that. So they'll interview Jerome Powell, and he'll make comments based on what the FOMC's stance is. It's kind of like a meeting minutes almost in a way. Like they just reiterate what their policy is and what they're thinking about and what they're looking at. And that in itself, like the little commentary after the fact, that can have an impact too, and it can be just as strong of an impact. So that's why, yeah, it gets wild during these events, these calendar events. It does get wild, and it can make for good trading if you've got the stomach for it, right? Yeah, you just got to be careful you don't get wiped out because it gets very, very volatile. Like it spikes all over the place. People will be getting wiped out left, right, and center. So be careful, guys. That's why, look, my approach is I'm going to wait for it to settle into a trend that's predictable and obviously play with a stop loss and try to use a responsible amount of leverage, not stupid amount. Responsible amount of leverage. I'm trying to go for more of high margin, low leverage. Because last year I got into trouble a lot with high leverage, low margin. And you sort of get into this like this kind of like false sense of security that, oh, I'm only using $50 or I'm only using $20. It's no big deal if I lose it. And you repeat that behavior and you're willing to lose $50-$20 at a time. You're going to bleed your account out doing that. So high leverage, I don't know, like it's, some like the thrill, some like the fast results, because you do get fast results sometimes. And those fast results can be bad too, so be careful using really extreme leverage. And yeah, just do what's comfortable for you. Like, I'm not trying to say what you should or shouldn't do. I'm just trying to explain how they behave, like these options that you take with leverage. But yeah, look, what I'm doing, I'm trying to be a bit more responsible and grow my account and appreciate money over time. I'm more comfortable taking my time with it and doing it cautiously rather than gambling, because I may as well just withdraw all my money from crypto and just take myself off to the casino and bet everything on black, on roulette or something stupid like that, right? Because that's gambling. That's like just having a punt. And that's, you do get people playing markets like that, and they get, more often than not, it's generally seen as not a sustainable strategy or approach to gamble in the markets. These people get wrecked, and it's the patient. It's the people that are patient you know, the traders or investors that have patience that get paid by those people that are impatient, right? You heard it from the man himself, Mr. What's his name? Berkshire Hathaway, Mr. The name escapes me. You'll see it in the comments. Yeah, Warren Buffett. Exactly, Warren Buffett. There's a good saying by him. Let me find it. The stock market is a device for transferring wealth from the impatient to the patient. Something like that. Let me see if I can find it. Yeah, I found it. There you go. Mr. Warren Buffett himself. He is very patient. He's held in investments for a long time. Oh my god, get a tattoo with his name. Yeah. Clive, I'll get a tattoo of your name one day. If I make it big, I'll get some quotes of yours tattooed on me somewhere. Yeah, so there you go. The stock market's a device for transferring money from the impatient to the patient. And I think it's good advice. And what's that other one? Be fearful when others are greedy, and be greedy when others are fearful. It's kind of like, you know, counterintuitive behavior with the market, with taking action in the market. So where are we in the comments here? There's a lot of comments, a lot of activity in the comments. Yeah, 2 days is forever to crypto traders, 100%. It is a blink of an eye for an investor. Smash the like button, guys. Hit subscribe if you haven't already, with the little bell notifications so you get notifications of when I go live next. Greybeard says, got a nice play on NRG playing out for this week. Cool. Very nice. Investors want stability. Yeah, keep in mind that the US rate has global impact that has massive effect on world economies. Yes. I mean, USA is a big economy, right? Yes, they've got their debt, but they're a big, you know, that they have high impact on markets, no doubt. Chair said that they only intend to do 0.75 for the year. Will be hard to divert from that, right? So a further 0.75% increase would take us to, what's that? Is that 5.25% total? Or 5.5 total? 5.5 total. Yeah, because what are we at right now? We're currently at 4.5, and they only intend on a further 0.75 at max. So that's, yeah, 5.25%, right? Anyway, the most responsible leverage is none. Yes, that's right, Clive. That's why it is not present in the stock market other than ETFs at 3x, right? There you go. Buffett, oh my god, get a tattoo with his name. Yep. Nobody wants to get rich slow. Yeah, that's right. No retail wants to be patient. No retailer. 26 in the chat, everyone. Make sure you pay that like tax. It's free. Yeah. I do appreciate the likes, guys. Let's bring it up. It's only at 15, and there's 23 of us watching. So if I could smash the like, I would. Daily coming in. Yeah, daily is coming in. 5 minutes until the daily candle. We can see a little bit of action happening right now on Bitcoin. Let's go down to, like, say, the 5-minute chart just to sort of see what's happening in the here and now. We had a nice little flush down to 22,500, and we've bounced. Look at the length of that wick. That's buy pressure, guys. It's a nice amount. Some people lining up to buy these prices, you know. And that's not small money. That's big money that can cause that, right? That's a lot of money compared to what, you know, relative to what we think is big and small, right? To us retailers. Clive, different story. Clive's a billionaire, so yeah. Clive says, expect oil to rise this year. Yeah. It wouldn't surprise me, dude. oil's like the price of fuel's been going up since the since the beginning of oil, really. Gasoline 2.4 gallon by end of summer. One thing positive is all the tech layoffs, right? 5.25. Yeah, that's it. I was right. Thanks, Great Bit. Google, Snap, Meta, Apple all report this week, right? Yep. This is the tech week of earnings. Major influence on crypto. Yep. The lack of buyers is the reason for the big drop. The last month, oil/gas has been rising. Yeah. Well, what do we got? 3 minutes? 3 minutes, guys. And then we see how this Monday candle pans out. I'm going to zoom right into it just so we can see it. Oops. Sorry that my chart looks like a bit of a disco. It's got all these laser lights going everywhere. Or a nightclub, whatever you want to call it. So, yeah, there's our Monday candle. Bearish engulfing, right? We are bearish engulfing. Ah, you're welcome, Clive. Thank you for the kind words. Great talk. Someone has to pay attention to the Fed and the interest rate and the inflation. I think it is like obviously at least at the moment it's the key driver for all markets. Everything's trying to react to it, and I'll try and get a bit more sophisticated with my knowledge around yield curve, the bond market and stuff, just so I can share that and try and break it down in the most simple terms so that everyone understands it. Because I think that's beneficial. There is a lot of people out there completely blind, trading blind, doing blind analysis on crypto. They don't even talk about the inflation rate or the where the interest rates coming. Like you'll have a CPI data release and things pump, and these people probably don't even know why it pumped. They're probably just like, oh, they're the whales are playing games, they're buying or something. You know what I mean? Like there's no rhyme or reason. Like they don't know, they don't really. Yeah. Anyway, I do try to find as much understanding as to why markets are doing what they're doing as possible. I think everyone should, if you're taking it seriously, right? Hide that position and liquidation line because they're no longer a thing now for me. I'm out of that position. I'm going to keep it hidden there though. Like I'm going to keep it just to remind myself of where I was if I need to see it. What do we look? We're looking at 30 seconds left until the Monday closing bearish engulfing on the daily candle. You can see it was a bit of a tweezer top, wasn't it? Tweezer top, recipe for a pivot, I think. It would be cool to see a continuation down, a bit of a correction going into the fund rate. Let's unwind some of that over optimism from the altcoin market. I'll have a look at the alts in a second. There we go. There's the new day. Monday, bearish engulfing. What's going to happen? Tuesday candle. The last day of the month, guys. The last day of the month. Either way you cut it, January has been amazing in all markets. So stock market, crypto market. Yeah, what a great January. Nice way to kick the year off. Try not to expect it as the theme for the entire year because there is no real solid indication of that yet. Let's just go day by day. Let's take it day by day. We can sort of like have a look at where we're going and where we're heading based off what has printed on the charts. Something I like to do is bring on the moving averages. Let's check out the 200 simple moving average and the 50 exponential moving average. These ones, these bad boys. Now we're on the Binance chart. We had ourselves, as we know, a death cross. And, you know, ever since then, let me avoid drawing on the chart because I don't want to bring the lines up. Okay, ever since the death cross, obviously, we just have not been able to get back above the 200 simple moving average. And as you all know, recently we've turned a page, we've turned a leaf, and we've actually come up above the 200 daily simple moving average, the yellow line. And not only that, we're actually now bringing the 50 EMA on the daily chart up over the 200 simple moving average. So that's causing that that golden cross, right? At a very interesting time. Now okay, that's all very well and good. That's the daily. Let's have a look at the weekly. Now, I think I'm going to need a bigger chart for this. So let's use the index for Bitcoin, which actually has the full history of Bitcoin on it. So it goes all the way back to 2009, to be honest. Like, let's check it. Let's go to the weekly. Look at this. We got information for 2009. That's when Bitcoin was born. Look at that. All of this activity here is below 1 cent. What were you doing during 2009? Not buying Bitcoin. No one really ever knew about Bitcoin. I think this is probably like only when Satoshi knew about Bitcoin back here. Anyway, it picked up. It picked up. We started getting moving averages. Where did they start coming into effect? So we're on the weekly. Let's bring back those moving averages. There's our 200 daily simple moving average, and there's our 50 exponential moving average. Now this is the weekly time frame, sorry. So these are, 200 weekly, 50 weekly. We have not ever death crossed on the weekly time frame with these moving averages, right? We came close here. I mean, it wasn't that close, but it was close enough to cause a bit of like caution, I suppose. But yeah, we rallied up nice out of that bear cycle of 2014, right? We got bullish. We rode that 50 weekly moving average all the way up, capped out at 20K, got back below it, bounced off the 200 here. COVID, we had a bit of a taste of what it was like below the 200 weekly simple moving average, but you know, we held above it, sprung back into effect. I think without COVID, like, dare I say it, if COVID never happened, I think, you know, maybe we would have had activity staying relatively tight to the 50 week moving average here, exponential moving average. So, but look, that little hiccup along the road was a black swan event. It was kind of unforeseen, caught everyone by surprise. And then, you know, this bull market, the prices we achieved, some people attribute that to the quantitative easing, like the money that was available and floating around in the economy at the time. And then look, inflation went up as a result of that. There was a lot of money, a lot of demand. It created a lot of demand out of nowhere. And we know that supply chains were heavily affected during the pandemic. So, you know, a lot of supply chain issues, a lot of, you know, stores going out of stock. The demand was there, but the supply just could not meet it. So, you know, what do you do in that environment? Shops increase their prices for goods to try and curb that demand or slow that demand down a little bit. You know, obviously there's going to be price gouging in there. There's going to be, you know, people taking advantage of the level of demand and the lack of supply. So anyway, inflation is what we got, and it's what we're paying for right now. We're dealing with the fallout of that crazy rip, you know, rally that we, you know, the stock market went to all-time highs. Crypto went to all-time highs. Everything went up crazy. And yeah, 2022, and maybe even this year, we're going to still be paying for it. You know, we're still trying to rebalance the books. You know, we're still trying to keep things under control. Ooh, super chat. Good to be alive. Appreciate that, my friend. A whole 18 pounds. Is that pounds or euros? That's pounds. That's all right. Damn. Pounds are like super money to me. The Aussie dollar is not that strong against the pound, but yeah. Anyway, thank you so much for that. Appreciate that. Um, so yeah, look, we are. Can you see what we're approaching? We're doing something. We're on the cusp of something happening with Bitcoin that has not happened before, and that is a weekly death cross. Look at that, right there. Can you see just the fashion that it's coming into it though? Like the 50 EMA, it seems to be coming in for like a very shallow, cross here. Like maybe we'll get like a skim. Maybe it'll skim. If price picks up, if Bitcoin manages to bust out and break through that 200 weekly simple moving average, maybe the 50 will just ever so slightly dip below it, but then skim it. We'll see. We'll see. Lagging indicators do not predict the future. They just show you what happened, right, in the past. So price, people do try to trade off lagging indicators and suggest that it's some kind of future prediction, but it's not. It's really not. It's just giving you an idea of where things have been and where they're going. Like of where sorry of the angle of approach, like the temperature of the market, I guess you could say. But yeah, there's no doubt. Like obviously this has come in steep. You notice that the 200 weekly is still a hill. Like it's still doing this. It's still going up, guys. This is where you get the people saying we're still in a bull market. Bitcoin has never been in a bear market. Uh, you've heard the people tongue in cheek, right, saying up only. Like, hey, it kind of is up only if you look at it. Now the S&P 500, similar case, right? Yes, it's had its pullbacks and recessions along the way, but look, let me find the one that has more history on it. Maybe if we just could use the Dow Jones. They're all short history. Anyway, they're pretty. I mean, it's a growth chart. Like things are growing, right? The economy grows. Yes, there's pullbacks along the way, but it doesn't change the fact that the world, our population grows, cities develop and expand, technology gets, brought out. We develop, we progress. The human experience is a big old progression. I would start to be concerned if humanity, if our society went into some big old decline and we just started declining over a long time. That would be like the fall of the Roman Empire, like the fall of the system. It could happen, who knows? But I think that's a pretty pessimistic, bleak outlook. I don't think that's going to happen, but whatever. I think keeping things relatively tied to reality, I think is helpful. How bad was the global financial crisis, right? Like that was pretty negative, right? This was the dot-com crash, so we all know that was pretty violent for markets, more so for the Nasdaq than the S&P. But I'll just do it on the S&P chart anyway. But there's the GFC. There's COVID. There's the COVID dip. And then look, this is what we're getting at the moment. High inflation, high interest rate environment is causing this, I think. That's a big contributor to that. I'm going to have to do a bit more education and research on, why people think that a recession is coming, like a big recession. I want to know why. Like, why the hell is that the case? Why are they drawing that conclusion? Because I've heard people threaten recession all the time. Like people are always talking about this big, gigantic recession that is supposed to come. Yeah, I just want to understand the reasons behind that. Anyway, let's go back to crypto land. Let's go to Bitcoin. Let's zoom in, turn log off, logarithmic. We were talking about the moving averages, the weekly. You know, it'd be nice to at least come up and test the 200 weekly moving average, which is currently at 24.8. So basically 25K, right? Can you see, interestingly enough, can you see the convergence of something happening here? Let me hide all these levels. Check this out. If I hide the TA as well, we have four things converging right now. We have the the August high. I was going to say all-time high. No, the August high of 25.2K. Look at where that comes through. It's almost perfectly coming through the moving averages there. See that? So there's that convergence. There's the 200 weekly coming up to the same point. We've got price coming up to that same point. And we have the 50 EMA on the weekly coming to that same point. So there's like this crossroads that we're at right now. This little meeting of some pretty big, you know, levels. You know, it's a very critical time, very interesting time for Bitcoin right now. You know, can we crack it? Can we break through what seems to be unimaginable resistance, like, you know, impossible resistance seemingly? Can we crack it? Obviously, we're taking a step back as of yesterday, and this week really has gone off to a bearish start, right? There's our Monday candle pulling us back almost 4%. Tuesday, so far, not off to the best start. Like, we are pulling back still. I see it as a positive thing, right? I want to see things get cheap so I can like get in at better positions for my longs. You know, today could be a day for shorting. You know, if you like to trade both long and short, like if you don't mind, if you just want to trade the direction of the here and now, then yeah, today could be great for shorts. We'll see. Just depends. I'm going to bring these levels back. Price levels. The recent TA that I've put up. So these boxes are the weekends. Generally speaking, the weekends don't have that much volatility. But, you know, the last couple have proven otherwise, I think. Like, they've been pretty... It's been a pretty nice range. These weekends, I think they've gone about $1,000, these ranges. Let's measure that. So from about here to the top of the weekend there, 1,080, so 1080. What was the weekend we just finished? Look at that. About the same. About 1080. Look at that. What about the previous weekend before that? A little bit tighter, but similar. About $1,000 range from 2 weekends ago. That's interesting, guys. Is that a theme now? Like, do we pull a $1,000 range on the weekend? Is that going to be like the theme of this year? $1,000 movement on Bitcoin is good. That's nice and volatile. That's good for trading, right? Let's go down to the 5-minute chart. Let's get real nitty gritty. We've capped 22.5, like I said earlier. You know, is this pullback, is this correction likely to stay in play? The moving averages seem to suggest that. Let me bring back my more scalpy type indicators. We've got the Ishimoku Cloud, we've got smart money concepts, we've got Bollinger Bands and EMAs, EMA crosses, and not to mention the divergence indicator, which is just an RSI that tries to point out and identify where divergence is occurring. So yeah, not a bad indicator. It's kind of like a 2-in-1, really. All right, so my take on it is, you know, if you use the strategy that I was talking about the other day for scalping or trading, let's say you're doing it on the 5-minute chart. Price is currently below. Bitcoin is below the 200 simple moving average on the 5-minute chart, right? So what does that tell you? It's a downtrend. We are trending down on the 5-minute chart, no doubt about it. Maybe even the 15-minute. Yeah, 15 minutes now below. What's the 1 hour doing? Ooh, okay, it's just recently popped underneath it. I think the 4 hour is still very elevated above the 200. Anyway, let's go back to the 5-minute. Getting off track a bit there. You can see there was a really nice drop below the Ishimoku cloud, which is this. You might be able to see if I zoom into it. Let's zoom up on this situation right here. So yeah, we teased it initially. It was a wick below the cloud. Closed back up inside it. Now, I guess with the clouds is you don't want to make assumptions when price is inside the cloud of where things are headed. So don't take positions in the cloud. Wait for them to leave and close outside of the cloud to get your entry, right, or your position. That's one strategy that I've sort of come across with the Ishimoku clouds. But anyway, you can see this big candle here closed underneath below the cloud. So let's just, for argument's sake, say that you took that as an entry to a short position right here on the next candle, and then with your stop loss set, you know, you can gauge that with the what is it called? It's the baseline, the Kijun-sen line, which I don't actually have on the chart right now. Let me bring them up. I'm going to hide the EMAs for a second just to show you these lines. Wait, that's the wrong one. Ishimoku. Conversion line baseline. Okay. So in this case, the baseline is the yellow line. And you can set your stop just beyond that. Now look at this. This actually wicked up through that baseline. So you have to be careful holding your stop too tight because you don't want to choke the trade out. Maybe in this case, having your stop above a previous like wick high would have served you a bit better in this case. But look, anyway, let's say it did wick you out. Like let's say you had your stop at the baseline, right? And then you get evidence that it was just a wick. Like it was probably just hunting liquidity, like hunting a stop hunt, right? So then what do? Let me go forward a couple of steps. You re-enter. There's nothing wrong with re-entering a position if you get stopped out, because if you see it for what it was, just a stop hunt, it's like, okay, well, they've done that. Let me take the position that I was trying to make, and then you get in again with a once again a stop loss set just above the baseline, and then you ride the result. Now, by the way, guys, when price is close like this to the baseline, that is excellent for taking a position, because look where your stop loss is so cheap. It's only a little bit up. It's only like this much distance away from where your entry would be, right? Very nice. Like it's a comfortable distance away. It's when you start trading in huge volatility like this that your stop gets distant and really far away, and that's where you can lose a lot of money. So try to take, I guess the point here I'm trying to make is try to take positions during a squeeze, during low volatility, because it'll prepare you for the move to come, like the expansion, because the markets like to expand and contract, and that's what the Bollinger Bands do. See, they squeeze up and then they expand as the volatility returns. Then they squeeze up again and expand as the volatility returns. So right now we are squeezing like crazy. We're very tight here through here. It's like a sausage. And then look, I don't know, it's starting to hint that it's slightly expanding. Let me hide these just so we can really focus on the Bollinger Bands here. But you can see here that, you know, after a squeeze, what seems to happen? You know, after a squeeze, you get an expansion, a return to volatility. In and out, right? So now the question is this going to expand up like something like that? Or is it going to expand down similar to what we had here, like this? You know, is it going to drop? And then I guess, you know, using your indicators like your Ishimoku clouds and your, you know, your EMAs, that kind of thing, you try to gauge the direction. And obviously the trend is down. So instead of taking a risky long, like maybe you want to wait for signals for a short in this case. But, you know, we could be pivoting here. Like this long candle here that come down and touch 22.5 kind of suggests that there is some kind of support at this level. And then maybe we get some kind of relief off the crash that we had yesterday, right? Maybe there's some kind of bounce that could be traded between now and, you know, whenever the next level of resistance gets met. But yeah, that's just sort of how I look at these indicators. Remember now with the strategy, let me hide most of this. I'll even hide the EMAs to make it even simpler. Let's hide the drawings as well. Actually, let's bring the EMAs back because I want to get this yellow line. All right, so when price breaks below the 200, like it did here, right? It broke below it. It was toying with it here, like it was a little bit up and down, undecided. But when it committed to a direction, geez, that was a nice short to take, right? But when you know that you're under the 200 convincingly, the entries for shorts, I would say, is when you come up and test the top of the bands. Like when you start getting price, and this is that strategy I was talking about. Like when price leaves the band to the top side and then shows that it's re-entering the band on a candle close inside, you can take a short position. Set your stop above the high that just came in, and then ride the trend. The trend is down, so like you found yourself a little entry, right? An entry into a short, and you can just ride that until, you know, you get signal to exit. Now, the exit signal, that's another story. That's why I've got this EMA cross indicator on. Let me find a clean example. Okay, I'm just looking at something there. All right, where's a clean example? I'll show you a long, maybe. Just checking. Let's go down to the 1 minute because this is, you know, everyone's favorite scalpy, micro scalping time frame, right? Okay, where did we lose the 200? Pretty much here. It was trying to lose it here, but this is that area of indecision that I was talking about. But yeah, we lost it here. Like I would suggest, like when you see evidence of price getting rejected by the 200, you know, open a short. And vice versa, when you get evidence of price getting supported by the 200, you can go long, you know. And the Bollinger Bands try to help you with that entry, right? Because it shows the extreme part of the reversion. So a Bollinger Band essentially is what's called a mean reversion indicator. So it's showing you that price is moving away from the average and then suggesting that it has to move back toward that average because, you know, price does like to come back and meet the average. You know, it likes to get back in touch with the average. So it's the deviation plays that you take positions at or you take profit at, depending on what direction you're going, right? But anyway, down on the 1 minute here, this was a good setup because like you had rejection. There was so many signals here. Look, let's really dial in. Okay. You had price under the 200 EMA. You had price come up to the top of the band, not only get rejected by the 200 EMA, but re-enter the band to the downside. Okay, let's say, okay, that's cool. That's all very well and good. But look, you also had these EMAs crossing. So like a death cross in this situation, right? So a sell signal. The signal came on this candle here. So you line it up vertically with it, and you take position on the following candle. If it as long as it's not a bullish engulfing or something like that, you would take short here, right? In this, with this strategy, because you've got so many different like scenarios. Your price is under the 200, price left and then re-entered the top of the band, check number 2. We had a death cross on this indicator, check number 3. That's 3 factors showing you that there is, downward movement to come. So cool. All right, I'm in a short. Let's say we're in a short here. Where do I take profit? Like where do I know that this move is exhausted? And one way to do that is to wait for the EMA cross to cross back up. See this little golden cross? Where did that happen? Has it happened? Yeah, down here, look, here. So just in this cherry-picked scenario, price has fallen from here, and you would have exited like roughly over here. So 1.7%, and it took under 2 hours. That's a big move for Bitcoin. Remember, Bitcoin's a slow mover. This is why people use leverage on Bitcoin, because to amplify the performance out of it. But yeah, there's an example of a way to use these indicators to help you get some kind of understanding or edge on what's likely to happen, or what's most probable here. Because at the end of the day, investing and trading, it's not about certainty. It's not about hard facts of what's happening in the future. It's about kind of anticipating and projecting based off past performance of what is most likely to happen. That's the best we can do. It's not about coin flips. It's not about just taking a punt and guessing. We use indicators because they can paint some kind of picture as to the condition of price and where we're at right now. So it's kind of how I sort of boil it down. So right now, look, the 200 on the 1 minute here has, yes, it's been steep, but now you can see it's starting to try and flatten. And price has actually popped up over it. See there, price has come up over, and it's trying to hold it as support. But yeah, look, this obviously is the micro chart, very small time frame. Be right back. I've just got someone at the door. I'll be right back. Okay, I'm back. Sorry about that. Parcel delivery. Okay. So what's happening? Look, we're starting to lose the 200 again on the 1 minute. See that? But how do we know? How do we really know if it's just a little fake down? Like if it's just a little brief hiccup? We don't know. Like, this is why we have stop losses. So let's FOMO into this. It's not FOMO really, but it's like, you take a chance with it. Set a reasonable stop loss. Like, let's set one relatively tight, because we don't want to be in it if price starts to move back up over the 200. So let's have it tight like that. I've got no target. I'm just playing the EMA cross. Let's play that as our exit. So either we're going to stop out or we're going to exit when we get a green cross on price. So we're FOMO'd in, we're looking okay. So this is like, honestly, this is a simple way to play the chart. You don't even really need Bollinger Bands for this method, right? Or any other indicator. You can just use these 3 EMAs. You can see we're losing that 200. We're not holding it. This isn't just, I don't think this is just a wick. This is candle closes underneath the 200. We've got the backing of the cross. This told us to sell back here. There was a bit of a shakeout, like, okay, we had the cross here and then this little reactionary move. Maybe that was like a stop hunt for people that went short here, like early. Maybe this spring back was like, shaking them out before the real move happened. Because they weren't wrong. The people that went short here weren't wrong. They weren't wrong. They were just early. Their timing was wrong. Direction was right, timing was wrong. That's all. All right, so this went into a decent level of profit so far, right? I'm gonna let it play out. I'm not gonna take profit. I'm gonna let it either stop out or we'll go by the green cross, like the EMA cross. Now this is just an example, guys. This isn't me telling you what to do. This is just showing you a strategy that you can employ. Test it on paper for yourselves, like, back test it as a method for trading. Yeah, seems to be working out okay so far as a short. Do we come down to test these lows? Possible. Remember, the higher time frame bias is down. 5-minute chart, price is below the 200 EMA, right? 15-minute chart, price is below the 200 EMA. 1 hour chart, price is below the 200 EMA. It's not until you get to the 4-hour chart to where price is above the 200 EMA. So look at the distance though. Remember how I said that price likes to return to average and test average sometimes? Yeah, well, that might be the case here. Price may be trying to get back in touch with the 4-hourly 200 EMA. All right, let's go back to that 1-minute chart, because we know the high time frame bias and that's down. So either we're going to be incorrect and we're going to catch some kind of pivot, or we've made a really nice entry into a fresh breakdown of the 200 EMA on the 1-minute chart, right? We'll see. Either way, like this was already a nice move. Look, because we afforded ourselves, by taking a position at the 200, a nice cheap stop loss. Like if you lose here, if it stops out, it's only going to be a slight move out, right? That's a small price to pay for a chance at making decent money. So right now, price is where? A ratio of 4. This is a 4-to-1 trade already and growing, right? This could grow. But yeah, not bad. And remember, I'm not targeting a profit. I'm not targeting anything. I'm going to wait for those EMAs to switch. And this is how you can get into some really nice trades, like where the EMAs keep you afloat, like they don't shake you out, right? Anyway, this could take half an hour. Like, I don't know how long this is going to take. So at this stage, you know what I would be doing here? I would be bringing my stop loss to like here. And that way I don't lose money at all. All I'm doing is making money. Like it might be small money if we stop out in profit here, like that small profit, but you know, this is still giving enough room for the price to breathe, right? Because what I mean by price breathing is that you're going to get some wobble along the way. It's not just going to be perfectly down like we hope. You know, there's going to be some movement. Price doesn't move in a straight line. It zigzags, right? And you don't want to have your stop loss so tight that you get zigzagged out. But anyway, look, either way, this trade is already a win in some respect, right? We just want to see if it's going to be a big win. You know, like, are we going to make a big return on our entry? Finally, I catch an example that works live. Finally. And by all means, this could stop out. I'm not saying that it won't. I don't know what's going to happen. You know, that's the first thing. Like, the best thing you can do is admit that you don't know what's going to happen. You know, no one knows, guys. That's the thing. No one knows what's going to happen. What we do know is our strategy and our rules. And what we can take action on is the rules, you know? Respect your stop loss. You know, if you have a target, respect your target. Don't move it. Just, you know, stick to your strategy, stick to your guns. Your strategy is your strategy because it has an edge, right? You've found something that more often than not wins. So it's got a high win rate, right? And just let that do its thing. If you stop out on some of them, so be it. You know, that's all part of the game. That's part of the strategy. But please, yeah, don't do what I did. Don't remove your stop loss or play without a stop loss and just cross your fingers, because that's not trading. That's hoping. That's something else. That's gambling, really. You know, you may as well have no strategy at all and just pick any point in the chart and hope for the best, right? But yeah, at least this is a strategy. This is we're using indicators. They're not there for fun. They're there for a reason, right? These indicators. Some are better than others. Some make more sense than others. Some are more simple to understand than others. I do prefer the simple indicators rather than the complex, like crazy ones that have like 16 conditions that you need to meet. Keep it simple, guys. It doesn't have to be difficult. It doesn't have to be complicated. You don't need 24 indicators on your screen. You can quite comfortably get away with the free version of TradingView and play with a couple of indicators, you know? See, at this point, like, when I'm trading, I like to be, sometimes I'm conservative. Like, I'll actually take profit here kind of thing. You know what I mean? Like, as I see price coming back up, it scares me. Like, I'm like, oh crap, I don't want it to come back to my entry. I'm going to get out here. But with this method, it keeps you in until you get the proof by that indicator that it's coming back and coming back up, right? So I guess the point of this little example is get comfortable taking like either a stop, like letting your trade stop out, for the chance that you might get a really nice big trade. You know, that's the chance, you know? I mean, this is just as good as not taking the trade, you know, just doing something else for the day, right? Not scalping. Like, you know, what's the difference? If you stop out, who cares? It's as though you weren't even trading anyway, right? At least this is in some kind of profit. That's the benefit here. But anyway, like, I'm not convinced of this little 3 candle, you know, situation. I'm not convinced yet that this is going to come up. But it doesn't matter what I think. The price is going to do what it wants to do, right? All markets, all cryptos, all markets, S&P 500, everything. It'll just do what it does, you know. Imposing your will or your bias on the market, it doesn't, that doesn't move the price, right? It kind of feels like it does, like sometimes, you know, like how you you have this superstition that when I go long, I get wrecked every time. Like, you know, the market sees me. It's not the case. The market just does what it does, and you're probably entering on FOMO, or you're getting caught up in the trap because they know how retail thinks. They know how the dumb money think, and they draw out the chart to lure in that money. You know, market sees me. Yeah, they see my $50 trade. They're playing with billions, but they want my $50. You know, Kasim says, I'm horrendous at trading short time frames, but when I use the 4-hour daily, weekly, and monthly, my trades improve exponentially. Yes, mine too, dude. My analysis of the higher time frames is way better than my analysis of the short time frame. And you know why? Because the 1 minute time frame is very noisy, and it gets pushed around a lot. You know, you're trading noise basically. You can do it. I'm not knocking it. I'm not saying that it's impossible. I'm just saying it's noisy and it's a lot harder to get a bearing on direction because it changes its mind so often. It really does. So with the high time frame stuff, like, you know, it could still be volatile, but the implications that you get from the 1 hour chart from the indicators are stronger than the 1 minute. I could go ahead and try and explain why that's the case, but I'm just I can't be bothered right now. One little reason why that I'll tell you is because to make an impact on the weekly chart costs a lot more money than to make an impact on the 1 minute chart. You know what I mean? There's one reason. There's other reasons, but that's one. If you want to manipulate the daily, you got to have multi-billion dollars at your disposal to manipulate a market that trades volume of, you know, what does Bitcoin trade on a daily basis? Billions, right? It'd be billions backwards and forwards of volume. And if you think you're gonna manipulate that, shit, you gotta have a lot of money. So on the short time frame, look, what's the volume? Let me turn on the volume indicator. So what was the volume of this red candle here? I'm highlighting it here. You can see the volume up the top left. It says 148. So 148 Bitcoin were traded back and forward in this one candle. 148 Bitcoin. What's 148 times 22,768? 148 times 22,000. What's the price now? 768. That's almost $3.4 million just to have impact on this candle here. So you would need more than that. I would say comfortably you'd need like $20 million just to manipulate the 1 minute chart on Bitcoin. That's not retail, dude. That's not retailers manipulating. That's, yeah, obviously it's the market makers, it's the dealers, right? They've got the liquidity to put up stop, to do stop hunts, to do liquidity grabs, to put up buy walls and sell walls. They've got that option because they've got the money to do that. We're like little ants in a jar to them. You know, we mean nothing as far as our influence. we're just riding their games because, like, obviously there's bigger fish, right? That may not be so sophisticated, but they're playing around with them too. So we're just here to try and like get in rhythm with what they're doing. All right, looks like this one's coming back up. And Nothing special. Nothing special. So we didn't get that whole movement down. I can hear some of you saying you shouldn't have put your stop loss there because you're now out of the trade. You should have kept it where it was because price may do this, you know. But look, I took out what, a couple of bucks of profit here, whereas the people that left their stop loss back here actually made a little bit of a loss. You know what I mean? It's kind of like I don't want to be in it if it's coming up so violent. Like if you know if the velocity of the bounce here is so strong, then I kind of know that it's got a pretty good chance at actually coming up past my entry and stopping me out, right? I can almost guarantee this will come up and wick through whatever stop loss that was. It just looks like it's gonna do that. Guarantee is a dangerous word, but just look. I mean, look, the power, the energy that it took getting back to here. And was I right? Kind of looks like it wants to stop that old position out, right? There it goes. See? Stopped. Sometimes like your guess can be stronger than other times, you know, like when you see something playing out, you can see when something's going to be a lot more right than when you're totally indecisive. All right, long. We just got above the 200. Let's delete that one. We just took a long here. Let's say we're late to the party, but we want to set our stop below the 200 right there. We've got a green buy signal on the EMA cross. Let's see if we stop out. We might stop out. I'm not saying we won't. This is just a hypothetical trade. But let's see if this rhythm, this momentum here takes us up. Remember, we have the evil higher time frame resistance of that EMA, that 200 EMA, showing us that we're going down, right? So this is actually a counter trend trade to those higher time frames. You've got to respect the higher time frames when you're scalping, or at least have an awareness of them. You want to be aware of what they're saying. So maybe my expectations for a long here shouldn't be so ambitious because the higher time frames aren't that positive right now. They're kind of like negative, if you ask me. So maybe we go for a 1-to-1 risk to reward, which is there. And this would be, you know, a scalp. This is now that we're up in profit, let's tighten up this stop loss a bit. We don't want to lose any money. We don't want to lose any big money. So we just tighten it up. All we're trying to do is catch this little momentum push if we can help it. You know, some people might say, just market sell now. You know, don't take the chance. It could come down again very quick. And that's, you know, that's up to your style. You know, if you're one of those people that are happy to wait and just see what happens, and you prefer to take a stop than to cut it short, then there you go. Okay, winner. Is this going to be some kind of bounce? Like, are we getting some serious action here? Look at that, beautiful. Candle growth, huh? What's up, NG? MG. OMG. Aaron says they see me too. After waiting hours for entry points, it never turns up. I FOMO so I don't miss the trade, and boom, my initial entry point appears. Yeah, dude, I've been there many times. Many times. Wow, this is quite the green dildo, as they say. That is a very erected candle on the 1 minute. Fancy that, the 1 minute. Look at the volume too. Look at the volume sticking out. The only like sort of relatively strong volume candle is this dump candle back over here. So is this a little hint? Is this a hint of what's to come here? Like, you know, someone bought a crap load of Bitcoin right then, right? Is that sort of like evidence that someone's preparing for some kind of bigger move in the future? Anyway, that was a 3-to-1 risk to reward ratio, that little scalp that we did. That's cool. Not bad at all. Does this help you guys with like how to approach scalping? Is this inspiring you to try this out? Or do you do this already? Let me know. Let me know in the comments what you guys are thinking. I'm going to show you guys a couple of crazy scalps that I did just for fun. This is just for fun. This is nothing serious. I don't even think these were from good setups, to be honest. These videos that I'm about to show you. Because I recorded these scalps. And they weren't even that good, to be honest. They were just, yeah, little FOMO things. What are we going to do? I'll take this one. I've got to make sure the sound is muted. All right. I'll play it on loop a couple of times, but look, there's my stop loss, there's my entry. You can see me bringing my stop loss up to where price currently is. Price is broken out above the cloud. This is Gala back on the 10th of January. Kind of makes me wish I left this position open, to be honest. There we go, profit. So that was a nice little quick scalp. What was it, like 30 bucks something? 20 bucks. Where did it come out? About 25 bucks minus the fees. So that was a pretty cool little fun scalp. What other ones do I have? This was another Gala scalp. A bit more money this time. It's up 100 bucks. Once again, I'm bringing that stop loss up to like catch it if it falls, basically. My entry sitting here. Now, just looking back on this, why do you think I got in where I did on this trade? I think, if I remember correctly, I saw this. Okay, impulsive move, yeah? Pullback candle. Awesome. Okay, the pullback didn't crash back down. So that gives me a little bit of confidence. I'm like, oh shit, I'm going to take a position. And I did. I took it on this following candle, and then I caught the next pulse of momentum. And that's, you know, what got me into the trade. So it's kind of like, it's not pure FOMO. FOMO would be taking along here, like where it's late. There is no setup. It's just in the middle of nowhere, right? That's FOMO. This is based off a pullback. There's a little bit of strategy in that. It is scalping because it's only quick. It's like 3 minutes. 3 minutes to make 100 bucks, risking $363 with a stop loss. I had a stop loss. So at this point, when it's in profit, you're not risking. There's no risk of losing money here. The only risk is that you're not making as much as you could if you know. Anyway, that was that one. Now there's another crazy one. This was a Solana scalp using only 200 bucks, but I was on 20x leverage. And you can see how violent this breakout was. I think it was up 250 at one point. Yeah, 247, 250 roughly. I kind of wish I had taken profit here, but I think I was a bit late to set up my limit sell. I was like, do I market? Do I limit? What do I do here? I think I went with the limit in the end. Oh no, market. Okay, I just market sold it as it was like shaking. But anyway, that's That's like scalping. That one was a 91 percenter because of the 20x, right? But yeah, those are just some examples of just crazy little scalps that I did. Look at this. We've got evidence of support. Evidence, guys. We pushed up. We pulled back. We found some support. We got, a little bit of a hint of continuation. Is it going to last? We'll see. These wicks on top here suggest selling, so that's kind of scary. That's the great thing about Bitcoin. Anyone can buy Bitcoin at any time, anywhere in the world. Yes, I agree. Zach says educational. Awesome. That's what this is all about. What you think about the prob with ADA? Is there a problem with ADA? Cardano? Is there a problem with it? I don't know. Sam Demand says, when OTC and exchanges run low, it'll force price up. Yeah, I agree. Like, so many people left exchanges because of the whole FTX debacle. Rightly so. Like, I understand. That's caution. That's being cautious. Like, pulling your money off exchanges to protect what you have, right? It's smart. If there's danger, you protect. You take actions to circumvent. Clive says, Sam D, and that is exactly what is wrong with Bitcoin. The 24-hour market is too illiquid. It barely works in the Forex market, which trades over $5 trillion per day. Yeah. It certainly makes Bitcoin volatile, I'll tell you what. When there's not much volume on the books, you can get huge crashes and you can get huge pumps if there's not enough liquidity to resist that price movement. Yes, the node. Cardano recuperates from network glitch, which affected its nodes. Ooh, okay. Damn. Bit of FUD on Cardano. Poor old Cardano, huh? According to Cointelegraph, Input-Output Global, the engineering and research fintech for Cardano blockchain, informed that a glitch resulted in 50% of Cardano nodes to disconnect and restart. Holy crap. It's kind of scary. Yeah, any kind of performance issues kind of scares the crap out of me with certain coins and cryptos. Like Solana was an example of that last year, or the year before, whenever it happened, right? It was getting choked up with traffic, and it caused I don't think it caused it to crash, but it just choked it up to the point where you couldn't even you couldn't transact on it. So it effectively shut it down, I guess. But look, the dev team behind it, maybe they're coming up with a solution to that. These things can be seen as a good thing. Like when a problem presents itself to something, the good thing out of it is that they learn to fix the problem so it doesn't happen again. And it just makes that project or that device or whatever, it makes it stronger. Cars are the way cars are because of problems that cars had. The safety measures that a car has are because of people have been dying in car crashes, right? So they make improvements to counteract that danger, right? You get seatbelts, you get airbags, you get, roll cages, you get this, you get that. Think anything. Everything has a problem, and we come up with technology or changes to adapt and overcome that problem so it doesn't happen again. So yeah, that's what with blockchain, with crypto, the more problems, the better. That's why you have these things called hackathons, where they invite people to try and hack their system because they want to know the weak points. They want those weak points exposed so that they can patch them up, so they can fix it and make it robust. It's basically a test. Like this, if you think about it, a lot of these cryptos are just still in their infancy. Like they're still in a test phase. It's like a test environment. Even Bitcoin is, there's the whole Lightning Network thing, which is supposed to improve the performance of Bitcoin. It's not changing the blockchain. It's just changing. I'm not a cryptographer. I don't claim to know this, but anyway, I know that Lightning Network was an after the fact adaptation to improve performance. But yeah, like between now and whatever time, right? Like in the future, I don't doubt that there's going to be something that comes out, like some kind of blockchain, crypto, whatever, that does a really good job at what Bitcoin was trying to achieve. You know what I mean? And we've seen that. We've seen things come out to try and, build off the idea and do it better. You know what I mean? The thing is, though, that the magic thing about Bitcoin is that no one's profiting behind the scenes. Like there's no central authority that's making money on the success of Bitcoin. Bitcoin's for everybody. Anyone that gets involved in it, if they're getting involved at the right time, and they're reading the results of their input after, like at the right time as well, like it's for everybody. So like that's what makes it difficult, I reckon. Like is someone going to come up with something so amazing and so great that they're not going to put their name to it or like sit behind it? Like is anyone that noble that like Satoshi Nakamoto, right? There's a very noble act of him to create Bitcoin and put it out to the world and not profit off. Well, he probably has profited off it. Let's put it that way. But he's not out there like, lapping up all the publicity, and he's not a public figure. We don't know who he is, or even if it is a he or a she, or even if it is an individual. Like it could be a group of people. It could be the CIA. It could be the FBI. Like we don't know who it is. We don't know what it is, or what Satoshi Nakamoto represents, or But I guess the point is, like, inherently it is decentralized. Like there is no team of developers behind Bitcoin that are deciding its tokenomics or making adaptations to its blockchain or like to how it functions. Like it's been built and it's working as it was built. And there's no one out there manipulating the supply like there is with Ethereum, right? I mean, a team of developers took Ethereum from proof of work and put it to proof of stake. So there's obviously people behind it making changes and adjusting how it works. So it's like, yeah, that to me, that's not decentralized. That's a central body, like a group of people that have control over what Ethereum is and what it does. So you kind of, you put your trust in them. Whereas Bitcoin is trustless. There is no group, there's no team that make adjustments to it. No one can take it off proof of work and switch it to proof of stake. As far as I'm aware, anyway. But yeah, how many cryptos can you say are like that? Bitcoin is unique in that way. I think. I don't think there's anything else out there that operates like that. I think maybe Dogecoin is kind of similar, and Litecoin. Charlie Lee was the head of Litecoin. He invented Litecoin, right? And he actually he stepped down from being the head of Litecoin. I think in an effort to give it that decentral decentralized nature. Maybe that was the whole point of him. You know, people saw it at the time as like negative. Like they were like, oh, you know, why is he giving up on his Litecoin project? And that's not the case. He was letting the world have it. You know, the world, you got, this is a decentralized cryptocurrency. You know, you guys do with it what you will. I built it, you know, announced, released into the world. I'm not touching it. I'm not manipulating it. Clive says, and others in my department had opposite views. Economics is not an exact science. That's right. It's like a decision-making animal, economics. Like it's based off human activity. Like humans are making decisions which impact the economy. Performance of humans impacts the economy. Like if a business does well, that impacts its growth. If a business does poorly, if there's embezzlement, if there's like fraud, if you know, that's going to have an impact on its growth and thus the economy, right? We all have an impact as a collective on the economy as consumers. And if we work a job that provides goods or services, that's impactful. So yeah, it's economics. It's like this big entity, like this big organism that is virtual, really. Like it's you don't see the economy. It's like this big, it's just like it's a machine at work. The money system. By and large, if you have a limited supply like Bitcoin, it will always be inflationary. Two factors. First off, 20% have been lost, so more limited supply. Do you mean deflationary, Clive? Like it'll deflate, not inflate? Because its supply either is limited or goes missing? Maybe that's what you meant. Yeah, oh, sorry, yeah. Not limited, fixed. Right. Okay, well, you were correcting the term limited, I see. So it has to go up in price as more and no more supply. So it has to go up in price as more demand and no more supply. Yes, right, I agree with that. This discouraged the spending of an ever-increasing price asset. You might have already covered, but Twitter is rumored to be adding crypto payments. So yeah, I've heard that. Yeah, Elon Musk put out that thing, that little presentation, business meeting thing, like saying payments, and then people got excited and like Dogecoin started rallying, and you know, yeah, interesting. So yeah, no real commitment to a trend yet, huh? At least down on this time frame, like we're sort of chopping a bit here. To me, that's indecision. We're sort of compressing. With compression becomes expansion, so it's a good thing. You know, you can see it as a good thing. If we go to what time frame is going to like highlight this current compression? The 5 minute. There you go. You can see that compression. And we're just waiting for that big blob to happen. The expansion. Are we expanding up? Or are we expanding down? Like, where's the volatility coming? Pick a side and place your bet. It's pretty much what trading is, huh? Identifying an entry condition and like, look at this excellent entry condition right here. Look how tight the bands were squeezing, like right here. The people that saw that and said, damn, these bands are tight, I'm going to take a position in here. Because whether I go short and have my stop above, or whether I go long and I have my stop below, either trade stopping out is no big loss. You know, let's say you went short and you got stopped out because price rocketed up from here. You know, you took a short loss, like that's okay. You could even switch, like when you get stopped out, you switch to a long. Or maybe you open a long at the same time. Now this is what's called hedge mode. You take a position, right, in both directions at a time of squeezing. You set a stop loss for both directions. And in this case, the short stopped out and the long went into profit. And that's hedge mode. So you take a small loss for being incorrect in one way, in one direction, but you make a huge profit to cover that loss and some, you know, into profit. And then look, that just stayed afloat for ages. That was a really nice squeeze on the band. And then obviously a high time frame squeeze, like a 4-hourly squeeze on price, is going to result in a nice move. Like, look how compressed the bands were back here. Like right there, it got real tight. Even here is tight, really. And then we started to expand as we ripped up. And then look, another. So there was an expansion, and then look, contraction again here. Take a position in the contraction. Take profit after the expansion, or at the top of the expansion, wherever that is. It can be down or up, depending on the direction, right? And this is what I was like hoping for, because we were starting to repeat this contraction like last time, like through here, right? And it kind of did. It kind of did start to expand, but something stopped it in its tracks, and we didn't get that big egg shape like we did last time. You know, that didn't happen. It got capped out. I think we hit a resistance of just under 24,000. So that, yeah, all right. Fair enough. Check it out. We have crossed back down on the EMAs in the recent few hours. We crossed up back on the 3rd of June. January. It's been almost a month between signal on this indicator. That's pretty cool. That's a nice trend that has stayed afloat for so long. Obviously, this indicator can get you in and out of false signals as well. Look, so in, out, like it's all, and that's when the market's squeezing, guys. That's when it's chopping and it's trying to decide which direction it wants to take. You'll get indecision from your indicator, so mixed signals, and you can actually lose a lot of money, like going in and out, and the price not actually giving a direction or a trend. So if you can identify when the market is squeezing like that, don't trade it. You know, don't take your position until you get confirmation that there is a committed breakout. There's a committed direction that's happening. Hard to do. Easier said than done, right? It's like a lot of strategy in cryptos is like that. You know, easier said than done, right? Especially when you got your money on the line. Like, it makes you fearful. Like, it kind of makes you nervous when you've got money on the line. You don't want to lose your money. So that plays on your decision making. Anyway, what is the altcoin market doing right now? What's popping today? RSS3, whatever the hell that is. Mina, M-I-N-A, Mask, or Mask. Dusk, Litecoin, up to 2.78%. Dash, even Doge is having a bit of action. 1.4%, wow. A little bit of a rally happening on Doge. That's cute. Not life-changing rally, but, you know, rally nonetheless. In 2.5 hours, it's gone up 5%. It's pretty cool. I believe anything out of Twitter as much as my ex-girlfriend's mouth. Money needs to be flexible for tightening and loosening the supply. Yeah, the way that fiat works, right? The Federal Reserve, the central bank, has control on supply. Well, they can, and they also have control on interest rates. So that those are their tools. They're two tools: adjusting interest rates and adjusting supply. One tool has its limits. Like, there's only so much you can cut interest rates to have an effect on the market. And you should limit the amount of, well, not that they do, but they should try to limit their quantitative easing. They're printing. I don't know. I'm no expert. I don't hope you sort of hope they know what they're doing, right? You hope that they've got the world's interests at heart, or the general public's best interest at heart. Sam D says, all fiat currencies fail eventually. Yeah, they have done. There's been no, like, 100-year or longer currency that has stood the test of time. Gold, though, on the other hand, has stood the test of time as a valuable thing, as a form of monies. Gold has outlived many currencies. Many fiat currencies, it outlived the Roman Empire. The rise and fall of Rome. The Fed has done a great job. Yeah, I would agree with that. Obviously, companies and businesses don't like the high interest rates, but it's necessary. It's necessary to try and curb inflation, right? What's Trueflation doing? That website that claims to forecast or predict what inflation is doing. Ooh, it's actually come up a little. Let's go to the dashboard. Let's go to like a 1 month. Okay, so it got down as low as 5.34%. And now it's back up like to 5.5, basically. 5.45, 5.46. So yeah, a slight uptick there. That's a 6-month view of their report on inflation. Year to date, so since the 1st of January. 1 year, so 12 months of data. See, they were calling the peak of inflation 12%, whereas the BLS, the government, only reported a peak of 9.1. So it's like, who's accurate here? Like, or who's lying? Who's skewing the data? I don't know. That's conspiracy, but yeah. Anyway, guys, what are we, like 2 hours? 2-hour stream. Not a bad stream. Thank you so much, guys, for tuning in, as you keep doing. Appreciate the loyalty, and thank you for those that sent super chats. It means a lot. And have yourselves a good evening and a good day wherever you are. And I'll catch you on the next stream. We're approaching that FOMC rates decision, so I will stream that thing. I'll be on half an hour before the data comes out, so stay tuned for that. But anyway, yeah, thank you guys. Thank you, Shelby and Mouse. See you later. Have a good one. Thanks, Clive.